Thank you, everybody. Good afternoon. This is the TMC Connect series. We call it TMC Connect Success Stories, and it is a regular program that we are doing where we are connecting, or we are spotlighting the relationships that have been formed between our members, our lender members, and our vendors. So today we're going to be talking to Blackhawk Bank and Snapdocs. And they're going to explain how Blackhawk Bank scaled their mortgage operations and doubled their daily loan count with Snapdocs. So here with us today, we have got Alex Meyer, who's the mortgage technology specialist with Blackhawk Bank, and Landers Carnell, customer success manager from Snapdocs. So with no further ado, I will hand it over to these gentlemen so that they can tell you about their TMC success story.
Great, thanks, Amy. Thank you for having us. And Alex, thank you again for being here to share with us Blackhawk Bank's story. And, to kick things off, Alex, I think what might be helpful is to just kind of set the stage here. Maybe share with everybody on the line today a little bit of background around who you guys are at Blackhawk Bank, how you guys got connected with us here at Snapdocs initially, and then a little bit around how you guys started your whole e-closing journey.
Yeah, thank you, Landers, and thanks, Amy and TMC for providing this opportunity. Always happy to speak about Snapdocs and the process that we went through. So like Amy said, I'm the mortgage technology specialist at Blackhawk Bank, and our journey towards a partnership with Snapdocs started in a forum not completely dissimilar from this. So, again, highlighting the importance of your networking groups and webinars like this offered by TMC. But of course, at the time we were evaluating an e-close solution was at the beginning of the pandemic. So for us at that time, it was more a mindset of just how are we going to close loans, not necessarily how are we going to improve or optimize efficiencies around e-close. It was just how do we get people to sign documents? So ultimately, we decided on Snapdocs for reasons that I'm sure we're going to get into more throughout this call. But we had our kickoff call with Snapdocs in July of 2020, and due to volume and of course everything that was going on at the time, me having to test everything myself, we eventually rolled out in October. So yeah, that's kind of the background of where we were at the time and how we eventually got rolling with Snapdocs.
Got it. Yeah, and Alex, I know when you guys were going through implementation and rolling things out at the beginning, there were probably some hurdles, challenges, reservations from your guys' team as you rolled out. So I think what might also be helpful is if you shed a little bit of light around what were some of those concerns and how did you guys address some of those concerns, especially for those who joined us today who might also have similar reservations around starting their own e-close journey.
Yeah. So as I alluded to earlier, the rollout felt somewhat prolonged, and I would say is probably abnormal. And again, that's more of just me trying to admin Encompass, manage a lock desk, and trying to implement eClose. But excuses aside, it was more of just this is your last chance with the borrower, right? For everything, right? It's the last step in the closing process. You get to the closing table and you want it to be as smooth as possible. And so to that extent, I wanted this to never feel like it was something that we just had to, get going, not completely evaluating all the steps that needed to go into making sure that this was a smooth implementation for all parties involved. So yeah, it did take a little bit longer to get that going, but again, it was just something that I felt could not mess up. And so with that in mind, we had reached out to the title companies that we worked with or we work with the most, and we were fortunate enough our implementation manager with Snapdocs volunteered to just offer his time and take those title companies through the product, give a demonstration of it from beginning to end. And we took the title company's feedback and based on that, they said it was very straightforward and was preferred to some of the other e-closing vendors that they had seen up to that point. So yeah, making sure that we involve them in the process as well. And then as far as, eventually getting to that rollout, which, we kind of define more as like a pilot or a soft rollout. We had reservations in how would the borrower going to receive this? How are they going to adopt to this new technology or adapt to this new technology? And, that coming from, what I perceive as a more geographically, technology adverse clientele, where historically, our clients like to do things in person, in paper. So, with that, we had targeted a more tech savvy LO to initially pilot this, and had them identify a borrower that was probably more receptive to that e-sign process, having e-signed their application documents, and just being more familiar with everything. And yeah, we watched that closing from beginning to end, watch the borrower get in, review documents, watching the borrower e-sign those documents, getting to the closing table, and wet signing a handful of them, seeing settlement, upload those right back to the portal, and 10 minutes later they're in Encompass, and just like that, I'm sold. Right? For me, that was it. That was kind of at the time, it was like, yeah, that's a great way of doing it. So yeah, overcoming that initial, reservation and borrower adoption, it quickly went away, where this was something that we didn't have to cherry pick the ones that we thought were going to be more inclined to e-sign. We'll just hybrid across the board, and where they'll e-sign them, we certainly take advantage of that. If they opt out of it, that's certainly up to them, right? If it's not palatable for them, they always had that opt-out feature, but we don't see that. I don't think we've had a borrower opt out at all. It's either been for reason of title company, maybe converting that package, but the borrower themselves have never opt out of it. So yeah, I mean, for us, it's more of the borrower not only has no objection to it, but they also prefer it. So yeah, it kind of just led more into 2021 and building up those processes, trying to improve on our wet sign closing to hybrid closing ratio, working with settlement to improve on their scan back percentages. And we finished up 2021 with our first e-note closing. So that in itself is, kind of a major hurdle to overcome, where it's like, okay, this is the promissory note. We want to make sure we get paid. Does it really work as you say it's working? And so, you obviously work with Snapdocs, you work with MERS, and you make sure that your investor is good with your e-vault. It's a huge operation to overcome, and to kind of get everything in line. But Snapdocs, our specific e-note implementation manager was absolutely fantastic. And working with MERS, he knew everybody at MERS, he knew everybody at our investor. So yeah, that was a huge highlight for me at the end of 2021, getting that done. And I don't know, I mean, you see it, and you see the e-note register, and then when you go to actually transfer that control to your investor, and you see it purchase a couple minutes later, I still get goosebumps when I see it today. So yeah, I guess those have got to be the big hurdles that we saw, and all of them, quickly put at ease.
Yeah, and Alex, you guys have obviously been up and running on Snapdocs for a while now, and have gone through and overcome a lot of those challenges that you initially ran into. Tell me a little bit about some of the internal operational efficiencies that you guys have seen, maybe for loan officers, and then also, you've alluded to this already, but some of the benefits that you guys have seen for your borrowers as well.
Yeah, so I'll start out with the LOs. And I can share anecdotally for the LOs that they absolutely love it. So the idea that what was formerly an hour-long closing where you got borrowers that are going through these documents, certain borrowers, like I'll pick on engineers, right, who want to read every single line, go through every single number. Those closing can take a while. And when you have your LO tied up, you got realtors that are tied up or attorneys that are tied up, everybody wants these closings to go a little bit faster than they used to. And if you're only, e-sign, or if you're only wet signing, note, mortgage, CD, anything else that needs to be notarized, that timeline for your closing appointment goes down drastically. And for our LOs, to get everybody out the door in 15 minutes is fantastic. It makes them look really good. And that's more time that they can spend, getting back to pre-qualifications or getting back to, maybe having drinks with the realtor afterwards, right? Going out for coffee or something like that. So it's more time back in their pocket. Behind the scenes, more in the operational standpoint, for the closer to be able to have an actual portal where they can drop all these documents rather than relying on, you might be using email, which obviously is insecure, but as things change, as documents, need to be redrafted, you don't want title worrying about, what's the most recent email that I have and trying to sort through, 100 different emails they're getting that morning, trying to find the correct document. Whereas, in the portal, they just see this document's ready to download. And so for them, it's just a click of a button. And, we as on the lender side of the platform see when they get in there and download it. So we know if they've been in there to download the most recent package. Additionally, for closers, as I talked about before with our Encompass integration, when they scan back those documents, those wet sign documents, we see those back in Encompass in, I say about 10 minutes. Sometimes it's sooner. Somebody's occupying the loan a little bit longer, but for them to be able to get in there and review almost instantaneously, you can quickly identify, am I missing documents? Am I missing signatures? Is this something that we can get to right now before the borrowers go on vacation? Or before they're on an island where you can't reach them. So the faster you can get to all this stuff, the better off we are. And then certainly just having that package already in the system, it takes away the time to have to scan that physical package in that you might receive a day, 2 days later, or who knows when, right? And for them to have to scan that in, drop it in Encompass, and then go, it just alleviates a step there. But yeah, we certainly gain a lot of time back from just having that scan back. So we certainly encourage that for our title company settlement partners, that if it saves you a step or saves you material costs in printing these documents, the physical copy for the borrower, just scan them back into the portal. We provide that digital copy. As long as you scan them back into Snapdocs, once we close out that portal, borrower gets the electronic copy. So, that's kind of one of the value adds that we try and use to promote that scan back adoption or percentage, is saying, this is great for you guys too. And then, yeah, I would say the biggest lift obviously is for the borrower though. And as I talked about before with, my engineer example, if they have the time to see that package ahead of closing, in some cases 3 days ahead of closing, they can review those documents at their own pace. They're not feet to the fire at the closing table where you got, closing agent that's just wanting them to sign. They got, realtors that are just saying, sign the document, right? This allows them to have, an evening or a couple of evenings to go through everything, make sure that they're comfortable with anything. If they have questions, they put the question right into the portal and then we address it. Somebody gets back to them and says, yeah, we'll look into correcting that, or we'll look into, why it might show this way. So, to give an example of it, I see the borrower will sometimes put in, my name is misspelled on an LOX and I'm not going to sign it. So for us, we see that a day, 2 days before closing, we have plenty of time to correct that document, put it back into the portal for a title company to pick up. Whereas, if they're seeing it for the first time at the closing table, then, they're not signing it or they're delaying the closing, and then you got to chase them down after the fact. So, yeah, for us, the huge part is them having the time to get in there and review it. The ability to kind of just flow into that e-sign process, if it is a hybrid closing, just makes it that much better that they're able to e-sign some of those documents. But even as a wet sign closing, just wet sign package in there, even though they're wet signing 90 to 150 documents at closing, or pages at closing, you're still going to have a shortened closing just because they've seen those documents ahead of time. So yeah, certainly something that we've seen have a positive impact on like a net promoter score that sets us apart from our local competitors.
Got it. Yeah, that's super helpful, Alex. I appreciate the insight. I think it's fascinating to see what types of efficiencies you guys have been able to glean, but not only on the borrower side, but also internally, since you guys started this digital closings journey. I guess to kind of round out the conversation, I'm curious, what are the next steps for you as you guys think about the remainder of 2022 and beyond? What's next for you guys at Blackhawk in terms of scaling your digital closings journey, and what are some of the other things that you'll be moving into?
Yeah, I think it's continuing the e-note process and trying to get as many closings that were hybrids into a hybrid with e-note. Still trying to improve our hybrid to wet closing ratio. And some of that just comes with, communication to the borrower. Is the LO identifying the opportunity for hybrid closing earlier in the process and preparing the borrower for that experience? So there's little things like that you can do to, kind of boost the numbers that way. But, certainly seeing the gains that we're seeing from the e-note, that's the biggest goal for us in 2022. But also identifying or continuing to evaluate the RON process. What was initially, the reason why we got into Snapdocs, right? Like early pandemic, how you're going to close loans has to be all remote, right? And we're not quite there yet. And, thankfully, I think we're coming out of the worst of the pandemic. But you certainly don't want to let a crisis like that go to waste. And so the impetus on us is, how do we come out of this better prepared? So it's still putting ourselves in a position of, let's keep RON in the evaluation process. And as state legislatures kind of all get on the same page in regards to, what are you able to remote notarize? What are you able to record like that? I don't know. It'll just make the process a little bit easier. But I think we've done a pretty good job of, first crawling, then walking, and then ronning. So pun intended there.
Got it. No, that's super helpful. And I think we hear a lot of similar themes from the other lenders that we work with here at Snapdocs with regard to moving into that e-note journey, which you guys have obviously started, and you highlighted that first one that you did last year, and you guys are moving along on that. And then obviously the RON journey, hopefully later this year, but certainly sometime in the future. So, Amy, I'll kind of kick it back to you here in a second. Thank you again for having us today. And Alex, thank you for participating and for all the discussion points. Really appreciate everything you've shared with us. Amy, thank you again for having us. Really appreciate the time. And I guess we'll wrap up and kick it back to you.
All right, awesome. Well, thank you guys so much. Very well put together, and will definitely be helpful for those on the call, and then also all of those people who registered, because tomorrow I will send out a copy of this recording to everybody, all 108 I think we had registered for this call. So very, very good. Thank you so much, Alex. Thanks, Landers, for taking some time and for celebrating your success story. Thanks, everybody. Have a great afternoon, and we will see you soon. Take care.
Thanks, Amy. Thanks, Alex.